Happy Friday, IHMC friends and family. It's Shayan with Integrity Home Mortgage, back with your weekly mortgage market commentary. It's Labor Day weekend, which is the unofficial end to summer, and the official end to summer vacation season, which is great timing because Treasury yields continue to fall, and that means mortgage prices improved again this week. We're sitting at our best mortgage rates since September 2024, back when the Fed had just started their rate cuts and the world was thinking they'd go another 5 or 6 times before all was said and done. Of course, inflation concerns stalled their cuts out at 100 basis points, and rates ended up rising for the first half of 2025. Let's hope this time will be different. This most recent trend towards better rates was sparked by the weak July jobs report on August 1st, and we really haven't received any information to the contrary since. So with every passing day, more and more investors are lining up on the side that the Fed will change policy and get back into the cutting game in September. We got a lot of new data this week, but nothing really came in far enough off target to kill this momentum. The week's biggest headline was this morning's core PCE number, which is the Fed's favored measure of inflation, which, while still higher than the Fed's target, also came in right on top of expectations. This next week coming up is shortened by the holiday, but it will not be short on headlines because it's jobs week. The Fed seems to be really focused more on jobs than on inflation right now after the weak jobs report. So there's a potential here to buck the trend. Next Friday's report is a critical one. Markets and policymakers alike will treat it as a key input for policymaking going forward. And so markets have currently priced in 2 to 3 cuts for the remainder of the year. But Powell's commitment to data dependency means that fresh economic headlines can still change the path of long-term interest rates. So it's important to keep in mind that while expectations are for the Fed to cut at their next meeting, which is less than 3 weeks away at this point, this is not a given. We established this new range on the back of a single week jobs report. In the absence of significant corroborating evidence to support rate cuts in the near future, we could all give it back with just one strong jobs report. So keep that in mind. Hope you have a wonderful long weekend, and we will see you next week.